Happy Friday. Rates barely moved this week, but the job market, boy, oh boy, has it softened. Consumers are still spending that money, and mortgage rates opened this morning effectively unchanged from last week at 6.24% for a well-priced 30-year fix. But all this could be setting the stage for some pretty significant move next week. So let's dive into it. Let's understand what's happening so we can effectively communicate to our clients and ensure they're set up for success. So as I mentioned, rates effectively unchanged. Despite some of the interesting headlines, we saw the close of a short week last week, 30-year fix opening at 6.22 last week. This morning, 6.24, negligible in movement. And that comes on the back of softening labor data. So as we know, the government shutdown has delayed BLS, Bureau of Labor and Statistics, the all-important jobs report, as well as unemployment. Therefore, market has really started looking to private sector reporting through ADP. And this week we received ADP for the month of November. And guess what? It was a pretty substantial miss. We saw 32,000 jobs lost as opposed to the 40,000 gain in payrolls. Market took that as kind of a subtle cue of maybe the labor market is cooling. That said, though, there was some contradicting information with consumer spending. We saw Black Friday and Cyber Monday post some very, very solid gains. Consumers still spending that money despite the fact that rates are elevated. And that, coupled with weakening employment, the market is a little poised where, yes, we know the Fed is meeting next week. What does the Fed do with this information? Well, again, markets are still absolutely prepared and betting that the Fed will yet again cut rates. But here's the kicker. As we've seen in the last two rate cuts this cycle, interest rates were the lowest before the actual cut. So why this is important to speak to now. As we head into next week, where yes, we do expect again the Fed to cut rates, mortgage rates are at some of the lowest levels we've seen in this recent run. Clients are wanting to get that last minute holiday deal offer accepted before the holiday and close of the year. Now is the time to take action. And again, if interest rates are still continuing to head lower, taking action before the masses hit market can set your client up for success. Again, if you're running into challenges with communicating this message or need just help in articulating what's going on in the market, please reach out. We'd love the opportunity to help. And if you feel anyone can benefit from this information, feel free to forward the newsletter away, subscribe to the channel. We want to get our information in front of as many people as possible. As always, wishing you all a very happy holiday season, a wonderful Friday, and an even greater weekend. See you next week.